All right, hello, folks. I know I've been extremely busy over these past week and a half or so, so I didn't really get a chance to stop in here this past weekend. So I decided to stop in here early Tuesday morning before I head out and start my day, just to give you guys a heads up and show you guys what the charts is showing us right now as far as this bear market. I'm going to switch straight to a weekly chart here of the VIX futures, and I'm going to point out a couple things. Again, told you guys the last time I was with you guys that if you pay close attention to what the VIX is showing us, it can definitely give us a heads up of what we can expect moving forward. This is a weekly chart of the VIX, and as you can see, since about October of last year, even though the VIX has been very volatile, it's been up and down. Look at the overall trajectory of the VIX. Even though we dipped a little here, it's been in a upward trend. Every time it had these pullbacks, it's pulling back to a certain level that's not creating a major lower lows. It's pulling back to a certain level and continuing to find a way to create these higher lows, as it's also wedging into a corner. See that? It is just wedging into this corner, which is eventually is going to cause some type of effect where we break out or break down, and I think it's going to be a breakout effect eventually. So this is weekly chart. So look forward to this to possibly unfold over the next few months or so, that the VIX is probably going to see a big jump out of this range. That's something to look forward to as we go through 2023 for the longer term. At the here and now, VIX is right at an area of support. So again, it would not be surprising to me between now and January or middle of January to see the VIX at least break back above its 50-day moving average, which is this red line, and possibly head up here to test this top trend line. All right, so that's where we look at on the VIX futures right now. And again, you can see that we are still in oversold conditions on the weekly on this weekly chart, looking at the full stochastics and the wins percentage, and the CCI, which is getting ready to cross over with a buy signal. So that's very positive for the VIX, which is in turn means it must be negative for our market. So with that said, let's switch straight to the S&P weekly chart. Here's the S&P weekly chart. And same thing, it's been in a specific channel for quite some time. Since beginning of end of 2021. See this channel that the S&P has been in? It's been in this downward sloping channel with all this volatility in the middle, but it's been creating lower lows, kind of like petered off right here. But look what's happening. Only back up to the 50-day moving average and right back down. Every time we hit that 50-day or get close to the up top portion of that trend line, we come right back down. Here we are again, back up to the top of the trend line and the 50-day moving average at the same time. What's happening? We are starting to trend back downward. All right. One thing we got to really pay close attention to, folks, is that as we continue, as you can see, you see this 50-day moving average now starting to overtake the price in a big way, and it's starting to curl back down on a weekly chart. So as we were heading up here, and now we're starting to slope lower on the 50-day moving average on the weekly chart, meaning that price action is really starting to be muted below these moving averages in a big way, and it's like it's just scaring a start. I'm going to pay close attention to this area here. This is where we dropped at 2020, which is the pandemic area, flush out, and this is the pandemic lows. And I'm going to show you a couple of things here in a second and tell you why I still ultimately think that we are going to retest these pandemic lows sometime probably in 2023. That is a huge possibility. This is the area to watch. if we break below that level, and that's why I got this dashed line here, break below that level. If we break below that level, we can start to see stocks really accelerate to the downside. So 2023 is going to be probably a huge problematic year for the markets. Again, so we see that as of right here and right now, the S&P on the weekly chart is starting to get rejected right at the top of that trend line, and at the top, right below, there's 50-day moving average. So we can probably start to see movement to the downside, start to accelerate. You see full stochastic starting to trend lower, RMS percentage starting to trend lower, and CCI starting to trend lower with a cross down, with the green line crossing below the yellow line, signaling a downward trend that's starting to form. All right, let's switch to take a look at the NASDAQ, because that has been a really troublesome area. These tech stocks are really getting the brunt of this bear market. Again, areas to pay close attention to. Here's the pandemic high where we started to drop from, and look at where price action has been on the NASDAQ. It has really been stuck below its 50-day moving average for quite some time, and has not been. Every time we get a rally, it bump right up to the 50-day and pull right back. 50-day, pull right back. Not even to the 50-day here, and we're starting to pull back, and we're starting to threaten. Look at this, folks. We are starting to get very, very close to threatening a drop below the pandemic highs, which will put us into this territory right here. Look at that. We have tested this level here, tested this level here. We're back at this level here. I don't think it's going to pass. I don't think it's going to pass this test. With the full stochastic is already pointing downward, RMS percentage pointing downward, CCI showing a sell signal starting to roll over. So I think the NASDAQ is in store for us a rude awakening here in the very, very near future, meaning that a lot of your tech darlings, folks, are going to get pummeled. I mean, I think Apple's probably the last of the Mohicans. It's holding firm, or not really holding firm. It's starting to trend lower, but it's not accelerating to the downside like a lot of the other ones have been. And I'm going to show you that here in a second. But the tech sector, like, it's ready to break that pandemic high area, folks. So bear market still in full effect, folks. We are not out of the woods by a stretch of imagination, and we're not even considered being in recession yet. And we normally don't hit a low, low in a bear market prior to a recession beginning. So which means the stock's got a lot more downside to go if we're not in a recession yet. So keep that in mind. Let's look at a couple more things. Let's look at the Russell. These are the ones just making this that's just giving you a clear picture of what's to come for the overall markets. So here's the 50-day moving average on the Russell. Again, same scenario. Every rally has been pushed back below its 50-day moving average every time we've rallied up to that point. Okay, back below its 50 days. So every time we hit this 50-day, pull down, roll down, draw down. Here is the pandemic high. Here is the pandemic low. But look where price action is now. Very, very close. We have tested the pandemic low there. High there and rallied. Tested it here and rallied. Will this next area be another test? We have to wait and see. I doubt it. I think we're probably going to end up breaking this level, folks, on Russell first. Look at the RMS percentage, straight downward already. Full stochastic downward, and again, sell signal on the CCI heading downward as well. And we're still in this downward sloping channel. Now, so we looked at the major indices in the VIX. I'm going to show you two more things, then I'll be out of your hair for this morning. Let's take a look at Meta, because if you don't believe we're going to, see some troubles here for the overall market, take a look at what some stocks are already doing. So here is Meta. Here is the little plunge during the COVID era. Here's where price action is now. So look at that, folks. Look at what happened to Meta. If I can. Okay. So here is Meta right here. And this line I'm drawing now represents where the COVID plunge was, where the low was, where we got a bounce. Look at Meta. It's already below that level, folks. So Meta is already below the 2020 lows already. So that will lead me to believe that ultimately the rest of the market will follow. What about Amazon? Same scenario. Little blip here, which was the COVID drop, and Meta didn't really suffer that much then, and then it started to rally. Look where we're at now. We are below those levels. I don't even draw a trend line there. You can actually eyeball it and see. We are below those levels now. So we are below the 2020 pandemic lows on Meta, on Amazon, and the infamous ARKK, Cathie Wood herself, has been getting crushed. Here is the pandemic drop. Here's where price action is now on the ARK fund, and it's well below its pandemic lows already. So again, I point those out to say, folks, look at the S&P again, weekly chart. I'm telling you that it's not going to surprise me as we go through 2023 to see a lot more stocks start to drop below their pandemic lows, not even the pandemic highs where we started to fall from, not even this level, but to see them reach all the way down to this level. Folks, that is a huge possibility. So watch out for that over the next coming weeks or so. Watch out as soon as the S&P and the Dow Jones and the NASDAQ and the Russell, they drop below these pandemic highs, we're really going to start to see a lot of stocks accelerate to the downside and start to head back towards those pandemic lows, which I think eventually we'll see the major indexes also back down here. This is where I think we had. I think the major indexes will be back down there eventually. All right, so keep that in mind. 2023 is going to probably be rough for everyone as far as a bullish insight is concerned. But if you know how to trade this market on the downside, folks, this is like a kid in a candy store. I mean, it's easy pickings in order to trade this market on the downside. Okay, so that's what we look like, folks, for right now. I'm trying to get back with you guys on next weekend to give an update as far as how things look towards the end of the year. And again, we are approaching that Christmas time. Normally after Christmas, they normally say there's like a 5-day Christmas rally. That is a possibility with everything just selling off right now just before Christmas. The last 5 days of the last 5 or 6 days of the year, we could see some type of rebound. But again, every rebound, I believe, is going to be muted because we are already below major moving averages. If we get a check back here between now and Christmas, we can easily get a check back up to that moving average. But guess what? After that, we're right back down. So just keep that in mind if that's the way things pan out. All right, folks. Hopefully, I'll catch you guys on by this weekend. Enjoy the rest of your day and the rest of your week.